This is Randy Finney with the right side of the chart, and this is a mid-session update for Wednesday, April 8th, 2020. What I'll do in this video is go over some of the things I've been watching lately and highlighting, give updates on those various commodities, the indexes, and anything else that stands out right now. All right, starting out, we'll look at SPY, and SPY is rallying today, but really nothing's changed since the update yesterday. Remember, it's we had a big reversal yesterday, so we're right about back where we were. This is a 5-minute chart, so I'll just show you what we're looking at here. So this is yesterday's trading right here. That whole box. Here's the daybreak line. You can see the big volume at the close and the open each day. And so we're right back to where we were yesterday, about when I did those videos. So again, technically nothing's changed there. We're on long-term charts. We are back testing this trend line. It's a long-term trend line. It comes in right around there, and this pretty significant 272.75-ish level right there. Major reaction low from back here in 2019. Some other reactions along the way there. So again, bigger picture. That's a weekly chart. When you look at the daily chart, come in a little tighter, and you can see that level here shows pretty well. What we're looking at are these major reaction lows, and we danced on that level quite a bit back here as well. It was that big 3-day successful defense of that 273-ish level right there on the way down, followed by a break that opened up the door for waterfall selling. So now we've rallied back to that. Again, that's where we were yesterday. So exact same technical posture as we were then, so nothing's changed there. QQQ, that's a daily chart. Let me show you the weekly chart here. Here's our bear market or bull market uptrend line right there, which we're currently back testing. Remember, this is a weekly chart I just jumped over to, same one I started out on SPY. And nothing's changed right now on a weekly chart, because you want to see this weekly candle where it closes today on Friday at 4 p.m. That's really it's really all that matters. You can see the range here on these weekly candles. This week, about 4 weeks back, we parked it right on the trend line after a big move up and below it, and then we gave way, fell to this next trend line I have here, this blue trend line here. Let's make that a little bit brighter so it stands out a little more. It should be, and that's it. So we fell to that secondary trend line, bounced off it, and we're bouncing back and back testing that yellow trend line from below. We're above that 192.46 level. That is a pretty decent resistance. So I'm going to give QQQ some points for that right now, no doubt about that. So again, it's how they close the week, and for the more near term, I'm curious to see how they close today. We're not anywhere near. This is a 60-minute chart. Let me pull the SPY 60-minute chart and the daily chart as well. Let's look at the SPY daily. That's an old bounce targets there. Here we go. Here, what we'll do is jump over to the 60-minute chart, and that's where we're at. So we're right about where we shorted yesterday, maybe a little bit below there still. So either profitable break even with the stop still up there, and set on a daily close, because this market is, as we saw yesterday, full of these one-day reversals. You can drop early in the day, rally in the close when the trend is bullish, and when you start to top out, you get a pop in the day only to see a fade there at the end of the day. Just like if you remember back on here, turn off all these lines, back on what I call Powell's Folly. You go to the daily chart. That's what I need to go to here, and I'll show you a similar candle. It was right here. Okay, that was the day. That's when Powell came out with his first 50 basis point emergency rate cut, intermeeting unannounced, unplanned rate cut right there. And you can see at that time a couple things happened. Well, we rallied into resistance. I was highlighting at the time. We had just closed out a long trade we took right here on that low on that Friday the 28th. Took it up there. That was an official long. Then we turned around and shorted, and then that's where Powell's rate cut came in. And you can see, maybe you can't see, let me turn it up, rallied right into the 50-day, smack into that. And that's where we got rejected, and that's also what happened yesterday. We rallied up. Remember, we had a confluence of moving averages, popped them intraday but then failed impulsively, and we're backtesting those right now, again including that 50-day. They all come in together, the 200-day simple, exponential, and 50-day all there. That is a confluence of resistance, and I still feel very, very comfortable with the short positions that we have on right now as swing trades, or at least that I have personally. I don't know how you guys are positioned, but that's it. So let's look at a few other things where there's more opportunities today, because we're right now just kind of spinning our wheels the last 2 days here in the broad market. I'm going to roll back to into the futures charts here going forward. But before I leave this charting program, I just wanted to highlight this. Someone brought it up yesterday, and I mentioned this one about 2 or 3 weeks ago as one of the standout little, fly under the radar. They certainly had their problems and still do. I believe they manufacture opiates, among other things. But they have a very bullish chart. I think the stock was priced for death. Due to their liabilities. They just secured some near-term funding the other day, and that's part of the catalyst. But technically, we broke above that downtrend line, and remember the whole basis for this trade is a very bullish chart here, at least bullish. Bullish chart. Let's just say what it is. Fundamentals might be pretty hard, but again, how much of that's priced in when a stock drops from $135 a share down to $1 a share, which is a 99% drop. I have to say a lot of that's priced in. The company's still operating, still around, and so what happens is you start to get news like this and technical developments, and you get short covering. So I did want to point out, and this is a weekly chart, by the way, which is same big strong positive divergence there. So as I laid this one out a few weeks ago, these are all potential targets, but I did want to update it today because a couple weeks ago when I shared it, I listed the first target there at 267, and I can't remember exactly where we were at the time, but I'm sure we're up 30-40% or so from there, and right into that today. We had a high of 270, and we're still trading under that 267 level. So not a bad time to either take profits, partial or full, or raise stops if you want to let it run, because it certainly has the potential to go up there, or that may be it. But as of now, looking good. All right, a few other things, and then we'll wrap this one up. We'll look at ZN, Treasury bonds. I'm going to talk quick, go over these quick, because these are all updates to things I've covered recently. Remember this price channel here? That was a bigger price channel with a smaller channel there. I was highlighting. We broke down below the smaller channel and now broke down below that larger price channel there, this one right here. That is coinciding with the rally in equities. I don't have much of an opinion on treasuries. This is ZN. I should clarify what that is. That's the 10-year treasury bond. Then you have the ZB, which are not the longest, but it's close. I think it ranges from like the 24-year to 28-year or something. Then you have the ultra bond futures, but ZB is close to the long bond, close to 30-year. If I can find it here, I've got so many charts running now on this monitor. ZB right there. Okay, same thing. There's that price channel, and remember we're up here last time I was updating at the top of the channel with a sell signal coming on a break of this minor trend line, and then we rolled down, hit the bottom of the channel, kept going. So it looks a lot like ZN. I'm zoomed in a little tighter here. This is only 1 month. I think I was on 2 or 3 months on ZN. And again, remember, ZN's a 10-year. This is the long bond, or close to the 30-year bond futures there. There's your next decent support level, about 176.301. Bitcoin, I don't have a strong opinion on Bitcoin. It's been moving up. It did take out that 67.44 level, and these are Bitcoin futures. If I don't make mention, it's up here in the upper left-hand corner. Yes, anyways, there it is. There's the next levels right there, 82.63. But here's a trend line to watch. It's walking up this trend line right now. And again, I do like to trade. I'll trade anything when the chart's set up. I just don't have a strong read on this one at this point in time, other than it is in an uptrend, and unless it breaks this uptrend line here, it may continue on up there to that 82.63 level. All right, next one up. And I'm not, by the way, I'm just going through left to right how these charts are set up down on my taskbar here. So I'm not going in any particular order or grouping, so against the equity markets we'll get to in a second on the futures. Precious metals, I'm going to hit at different metals right now. This is palladium. Palladium, same story as the last few days. It's just holding on, clinging to this trend line right here. We need to see this trend line go. That's where we had the ascending broadening wedge pattern. We shorted here. We use PALL as the official proxy, shorted on a kickback rally, or no, I'm sorry. It was rejected there, and then I waited for a break below that level or comparable level on PALL, which it did. And so it broke that price support, the horizontal support, but it's been hugging, the futures contract has been hugging this line right here. So we need that to go to open the door. So still looks good. PPO is rolling over down. It looks like it's curling back down just below the zero line here. That's what you want to see. Keep that trend indicator bearish. And if and when the stock market heads lower soon, like I think it will, that should bring PA down with it, because this is more of a play on economic growth right now, and automakers, auto sales, things like that. E7 Euro futures, there it is, a little pattern there. You can see support resistance levels. Euro is I think the outlook's bullish. I think the euro is going to continue up. The dollar is going to continue down. That should be good for gold, which I'll get to in a second. Need to take out this minor uptrend line. Bigger picture is you had this downtrend line here. Well, first you had this small bullish falling wedge right there. It broke out, but then we traded sideways, made a slight marginal new low, so that only extended the divergence right there, the bullish divergence, and then we broke out right here, and first leg up, and so I think we continue up, and you can see my price targets. Remember, this is E7 Euro futures. When the euro is going up, the dollar is going down, because the euro is by far the biggest component against the dollar index. So it's almost not a direct mirror play on the dollar, because there are other currencies in there. The yen is second most at but only about a third, and then everything else doesn't even, you can add up every other currency behind the euro and the yen, and they won't even move the needle on the dollar index. So really want to track euro, you can track the yen as well, and where those two go, that's going to have a biggest impact on the dollar index, which we'll get to in a second. Let's just jump there now. DX dollar futures. These are US dollar futures contracts. Most of these charts, unless I specify otherwise, are hourly charts, 60-minute chart. And so what we need to watch right now, we're dancing on the 100 level, 100-ish support right there. We had a trend line here that was recently broken, and we've been back testing it from below while we're wedging up right here like this. So that's my expectation, but unless it happens, we need that sell signal break of the 100 level on the dollar index or dollar futures. Should take you down here for you forex traders. And again, it's also, if you're in the gold trade, this would be net bullish for gold, a drop in the dollar right there. And PPO, a little indicator right here, I drew a little arrow. The PPO signal line and the PPO itself is turning down right at the zero line. And where that's significant is that often defines the trend. There's a zero. You don't see the hard line on the chart. It's right there where the histogram is, so if it's not clear. But when you're, PPO, and the PPO signal line especially is above the zero line, the trend is bullish. Bearish when below, bullish when above, bearish when below. So if we can keep it there, it says that this uptrend right here that told us we were at from here to here has now run its course. New downtrend started, and that's my expectation. But we'll have to see it, and it'll certainly help to see that 100 level go. All right, KC coffee, let's do a refresh. Sometimes this one doesn't refresh. I pointed this out. Well, I've been doing continual updates. The most recent one was this morning, saying it was an objective long on the back test here. We broke out above that downtrend line right there. So you could step in here with a stop somewhat below for the next leg up to that 122.50 target. So far so good. We've reversed, but of course we need to take out that previous reaction high. That'll help open the door for more upside to that 122.50 level, and quite likely the next leg up in coffee. All right, we already covered dollar. Let's see, these are live hogs. No, HG, that's HG is copper, sorry. HE are live hogs. All right, copper is kind of wedging in here if you're a copper trader, and there's a CPER is an ETF. You can trade copper, or JJC, I believe, is an ETN that trades copper. And they're kind of pinched right now in this triangle pattern, bullish, bearish. And I wouldn't, this is big support here, about 224. So forget about the trend line. That would certainly be bearish, but you wouldn't want to short copper until and unless 224 went with conviction, because again, that's a much more significant support level than that trend line. But they both come in together, and so both get taken out. That's probably going to bring you at least to this uptrend line right here, and then ultimately down here maybe to that 214 level for those looking to play a pullback trade on copper. And then, like I said, it can go the other way. I don't have a strong opinion on it, but I'm leaning towards that downside. Let's get rid of that trend line. Well, might as well get to the indexes now, and then I will try to group these together, because I haven't updated RTY in ages, although I do once in a while update IWM. Here we go. RTY is by the way, the Russell 2000 small cap futures. This is a 1 month chart with hourly candles, 60-minute chart. Big old level right there at about 1190. We have the previous reaction high here. Almost got to that level back here. Was resistance here, and if we pop it, and actually we did slightly. So technically, what I drew this out earlier today. We were a little bit lower, and I drew right here a divergence line to say if we made an equal or higher high, which we've now done. We've made at least an equal, maybe a slightly higher high, and the indicators are making lower highs. Even if they were making equal highs and we made a higher high there, you still have your negative divergence. So I think this is about as good a shot as I've seen in a long time for an objective short entry or an exit on any long positions on IWM or RTY. IWM as well, that's the small cap ETF. Stop somewhat above, give it a little room. It's a whippy market, but put a stop up here somewhere in there, and swing it down back to at least that 1116 target, and quite possibly more. All right, that's small caps. Here's large caps. ES popped that level I highlighted this morning, this symmetrical triangle pattern right here, defined by price support at about 26.26, and then a downtrend line. It popped it, gave us a near-term buy signal. Popped the 26.96, but not very impulsively. I will say it's above it. But if we fall back down, that's bearish, because that'll be a bear trap or a false breakout. As of now, it's above it, so you can't knock it too hard. But let's look at NQ, which has been struggling with its comparable level. Let me zoom in a little bit here. NQ are the NASDAQ 100 futures. And remember, the S&P 500 isn't going anywhere without the NASDAQ 100, and vice versa. Sometimes what I'm getting at, sometimes one will break out at the same time the other one hits comparable resistance and fails, and then that'll cause the first one that broke out of the two, it'll cause that to be a failed breakout or a bear trap. And so far what you can see here is, you need to see a solid break and or solid 60-minute close above there. You've not gotten that. All last 3 60-minute candles, we broke out this morning. That gave us that near-term buy signal, that pop that we had so far today. But so far since then, we hit and stalled at that 81.58-ish resistance level. And I still favor a pullback back here, come back test this trend line, maybe fall all the way back here to that 71.52 level, maybe a little bit above there at minimum. Again, that's a minimum target. But if we can power on through there, then that's near-term bullish, and we might could open the door for a little more highs. But again, we still have some pretty big levels on the weekly chart, and that's how trading this market, this environment with a lot of volatility is. We can go up 3% more, 4% by Friday, but then even 5%, then reverse. So we have to see, as far as swing positions go, how we close the week. I'm going to leave the stops alone for now on most of the trades. I'll check out the only one I think in jeopardy right now is the semis that came close yesterday, that SSG trade. I'll check on that in a minute. But let me look at a few other things for you here. Okay, I already covered the dollar and the euro, whether you want to trade those if you're a currency trader, or you want to just use it to kind of gauge where gold may be going. So here are the key levels in gold. Gold has pulled back. As I mentioned last update here, we have a big level around here. So far we've been popping it. We popped it a little higher this time than the previous 2 times. We failed right there, but it was just a whipsaw. Remember, we burned a lot of energy just to get there. Breakouts that occurred. We had this bull flag scenario right here. Bull flag broke out and had a very long run, even longer than the flagpole measured, the measured target for it. So it burned a lot of fuel up. What do I mean by that? Well, breakouts that occur when you're extremely overbought have a much lower chance of being built on because again you used all that energy to get there. What I mean by that? Well, now if we consolidate here for a little while and then pop it, what's going to happen is the RSI will be down here. You won't be overbought. That's what happens. So when you're overbought, it's hard for a stock to just keep on going through there. At best, you come in and back test it from above and then consolidate. So that's what's going on with gold. But bigger picture is, the big picture, weekly chart, daily. The reason we're long gold, it's in a bull market. So this is just a little pullback here. Here's a little flagging action. I need to point that out. I'd be remiss not to do it. That could be a flagpole, a little bear flag, and if so, breaks down. The measured target would probably come closer to down here, but you do have pretty good support right there first around 1652. Because I'm leaning towards a breakdown in the dollar, breakout in the euro, I lean towards this flag not playing out or being foiled if it does break down, maybe a whipsaw signal and going up. But again, the big level right there is about 1730. We've had a lot of taps on that level. We've checked it. Gold's been checked there many times recently, and it's, I think, building up the energy to break on through there. Head and shoulders are not. Some people will use them as some traders as continuation patterns. Typically, they're bottoming patterns. I should be clear. I mean inverse head and shoulders. That's the opposite of a head and shoulders. Head and shoulders is a topping pattern. Inverse head and shoulders are bottoming patterns. But here's the thing: a lot of traders look at these things, and a lot of traders therefore play them and say, "Oh, I see an inverse head and shoulders," and I've seen them traded as continuation patterns. What do I mean by that? Well, to the left of the chart, if the trend was up coming into it, that's a continuation pattern. You consolidate and then break above it, and then the next impulsive leg starts. I can't draw off there. So that's something to watch for. And again, whether an inverse head and shoulders should act as a continuation pattern within a bull market or not, it doesn't matter. It matters if enough people are watching it, because then it becomes a self-fulfilling prophecy. A lot of traders take it. And again, inverse head and shoulders, not this would be your neckline, the same level I'm talking about, that 1728 level. Oops. Okay, my chart disappeared. So that's it. And that would be big. So that's why I'm spending a lot of time here talking about gold. Some traders, you could draw that as a slightly upward sloping line, but again, just give or take in this area here, 1728 up to that recent high there. So that's what you want to look for on gold. All right, next one up, silver. Silver, this is a 1 month hourly candles. You can just see some levels here. There's a little downtrend line. If it can pop that, good. If not, you have a little bit of minor support right here. These are just kind of micro levels for active traders. If that support breaks, so I would say this is a descending triangle pattern. Those are inherently bullish, but they can break either way. So you want to look for a break either above, which would be bullish, could take us up there, or a break down below, which would be bearish. And you have a couple decent supports here that should come into play if silver breaks to the downside. Indicators aren't really telling me which way this one goes, but believe that if the bullish scenario plays out in gold, which I'm favoring, then that should lead to the bullish scenario here in silver. Next up, wheat, ZW. I might not have covered this one yesterday when I went through a lot of the ag commodities, so I just want to do an update. You have this triangle pattern forming right now on the hourly time frame. This is a 3-month chart. And there's your last divergent low right there. Nice little bullish falling wedge. Breakout back test was a catalyst for this move up. Just like you had a divergent high right here, and that was a catalyst for that move down. So we're in an uptrend right now, but bigger picture, more of a sideways deal. But just similar to gold, you have a pretty big reaction high back here. Right there, and this one here. Let me give you the line on that. And I know I'm covering futures right now, and a lot of you don't trade that. Wheat, WEAT, leave out the H. WEAT is the ETF for this. And as I said, maybe I didn't cover this yesterday, but I do often. JJG is the ETF for grains. It holds the three primary grain futures. It holds soybeans, corn, and wheat. So you can kill three birds in one stone buying JJG, or as I mentioned before, DBA, and it has those plus a lot of other agricultural commodities, including livestock and some other things there. So that's it. Look for a break of that level. If that does occur, you'll have a much more powerful buy signal if and when wheat can clear that 587 level. Obviously, not a good thing if it breaks down. But that I'll say this: the bottom of that triangle is not nearly as well defined. We don't have as many reactions, only a couple reactions there, as is the downtrend line. So this line I give a higher weighting than this one. In other words, we could go down here and then reverse, and I might draw it like this. And I could even put in some price support down here. Roughly that level. That's not a hard level, but seems to be around that recent low, give or take. We're out there about 538. That's pretty important support. So as long as wheat remains above there, I think it looks good, and I favor more upside, and then it will look even better if and when it can take out those highs. And just like I said a minute ago with gold, if it were to do this over the next week or so, and then break on through, that breakout may fail. So it depends if and how it gets to 587. If it kind of chops around a little, it's not extremely overbought, then you have a much better chance of a breakout really sticking after that. And next up, on a related note, corn. Corn still looks primed to go, but we need that buy signal. As I mentioned, it's in this nice, clean, bullish falling wedge pattern. These things tend to act as coiled springs. You need the buy signal, of course, because it is in a downtrend. Make no mistake about it. Downtrend is defined as a security making a series of lower highs and lower lows. But that's what these patterns are. And then, so when you get the wedge, especially when you have this bullish divergence right here down below, you look for a breakout above, boom. First target and resistance, second target and resistance, third target and resistance. And if it starts to run, well, I'll just give it to you now. We'll add another level somewhere in this area right here. Yeah, roughly that level there probably come into play as a resistance. So close, but not there yet, but it's still an active trade. I think I added corn as an active trade. I throw out some of these as active and inactive or unofficial trades, but I believe corn's an active trade because I believe a breakout is imminent, and it's holding up here too so far. It seems to be basing, consolidating in this area. I haven't covered platinum in a little bit, but and I already hit on gold and silver and palladium, so only just covered here. I mentioned we had this potential bearish pennant, bullish pennant. That's this being your flagpole. Back here we had a bear flag. There was your flagpole, but it played out well beyond the measured target. I'm not super hot on this, but if it can break to the upside, I can tell you this: if it gets up to 802.65, I will be hot on it. That's a pretty significant resistance level, and it may offer a nice shorting op right there for platinum. And platinum is, although it's a precious metal, it's more of an industrial metal, also used in emission controls like palladium. And it's in, palladium is in the platinum group of metals. There's palladium, platinum, rhodium, I think, and a couple others. They're all considered in that group of platinum metals. But and this is platinum itself. All right, let's move on because I don't have right now I don't have a position or strong opinion on that. GF, I believe this is your feeder cattle, if I'm not mistaken, on GF. I've got a couple charts up I added recently to my screen here. I don't trade them often, but because they're thinly traded, and you see these wonky candles, these big gaps and all that. So you need to know what you're doing. But I laid out cow, C-O-W, is a way, not for feeder, but live cattle. Live cattle, when they're young, born from a calf up to a certain weight, like 600-800 pounds or something, they're live cattle. Then they hit that weight class, and those are always raised for beef, or intended that way, and then they go to feeder cattle when they get up to size there. But either way, that's livestock. They're going to move together mostly, and that's a nice breakout above that wedge. I believe I highlighted yesterday, right there, clear breakout. And we're going to get to the other ones here in a second, the related ones. That's GF, and then here it is, live cattle right there. Boom, breakout above the same thing, looks good, up to another 2.36% today. I mentioned it recently, looking good with this nice positive divergence down here on both the RSI and the PPO. That gives you this wedge type pattern which we broke out of today. And that's it, not much else to say. I think ultimately we'll work our way up to at least this level here, but work to be done. We could come in and back test, but it's hard to say right now. I don't see a very solid resistance level. You can target these reaction highs, but really up until about that 99 88 level there. That would be a pretty decent move if we get there, about 15% rally from where we're at right now. And that's again on top of another 2% gain from where it was yesterday. And the other one, on a related note, are lean hogs, HG, and let's make sure this one's updated for you. And this one I highlighted on the daily chart yesterday with a big bullish engulfing candle, and then I showed on the 60-minute chart we had a downtrend line which was taken out today. We popped. I may have added this resistance level since I covered that yesterday because we had a big old gap right there, and that's exactly what we hit. Pulled back a little bit, but it still looks good. Even though it's pulled back off that after being up earlier. We're above the trend line, hit the first resistance level, had a reaction, and not to be, that's not unusual. And I still think this one can work its way up here at about the 74 level. So on lean hogs, you're talking if it gets up there, that's about a 45% run. Be nice if it does. And here's cow, again the ETN if you want to trade that. There's your falling wedge pattern breakout. Popped really into that first resistance there at 31.32 today around the highs. Next target there. These are unadjusted targets, still an unofficial trade. I may add that as an official trade. Let's just see what happens here over the next few days. Okay, NG, I highlighted this one first as a long a few days ago, last week, about a week ago, and on a first back here, then it broke out of the that smaller wedge right there, big divergent low that it was coming off of, just like crude oil right there. Boom, boom, your positive divergence on the indicators. Smaller wedge downtrend line triggered that impulsive run up to the larger trend line right there. Broke out, had a rally up to that 107.5 target, pulled back, worked its way up, and then I highlighted it just yesterday coming here. We had what I call a wedge overthrow. That's when you have a bearish rising wedge, and at the last minute right when the wedge looks ripe, ready to pop, you get an overthrow upside the wedge and then back down into it and below. And they're very bearish because what happens here, a lot of things happen. The wedge overthrow in itself is bearish. Then you have a breakdown of the trend line. There was your sell signal. As I said yesterday, you could either short it there at the 184 level or short on a break of the trend line. You have the trend line break there, and then once you fell back below, that confirmed all this was a false breakout, or aka bull trap. And so those that went long in the break of 184 thinking this trend was just going to continue, even though we were extremely oversold and had the divergences, they're now being squeezed out of their position. Their stop is being hit, those longs that took it. And so we're coming up to that first and minimum target there, about 178 right now. Again, these are unofficial trades, so it's the actual resistance level or support level you want to cover a little below if you're targeting there. Or the easy thing to do, we've had a nice run. Just trail stops. TA rules 101 say keep your losers short, keep your stops tight and let your winners run. So if you shorted this, you could either cover here, or you can just lower your stops at this point to protect profits and hold out in case it breaks there. If it does, we could head on down here to about the 1705 level, and we have a couple reactions here. Let me give you one other target for those of you that took this one. And UNG is the ETF or ETN. Let me clarify, an ETN that is non-leveraged, trades natural gas long. You can short that, or you can buy. I don't know if there's a 2-time leverage or non-leverage. I'm pretty sure there's not a non-leveraged nat gas ETN, but we have the UGAS or DGAS is 3-time leverage. You just have to watch out right now. We've seen some stability in the financial markets recently with the rally, so right now today is a little safer than buying DGAS was 3 weeks ago. I'll say that. But if you start to see things really, markets start to really get hit hard, you need to be aware of the risks on holding those 3-time leverage ETNs, especially in volatile sectors or tracking a volatile commodity like natural gas. All right, we're almost done. I think that's about everything. What did I want to cover here? I have cocoa, CC continues to do well. It's taking a little breather. It's had a nice run. NIB is the ETN for that. I still think it heads up here to 2508 at least. And then what is this one? Oh, crude, of course. Crude, same story. A couple weeks back, I was highlighting this divergence right here. Big bullish divergence building, just like on natural gas. Broke out, had a nice rally, and came full circle, ending just like we had a big divergence there. We had a smaller, but still enough negative divergence right there was a catalyst for this reversal here. I pointed that out as a short at the 28.47 level just a week or so ago, and it's working its way down. And in fact, it's working. It's playing out exactly as that post was on Friday. I think it was a short. I had it going down here, breaking this wedge, hitting the 20. Was it the 2601 target? I believe so. Yes, it was bouncing. That's the scenario, and then going on to break the more significant, larger uptrend line right there off the lows, which it did. I hit another check of that 26 support level, and then has since, like expected, as expected, broken and made a run down here. So if I recall, that was how that scenario was drawn out. Now it's holding up right there. It's so far it's gotten about halfway 3 times now to that 2317 level, and I think it's going to get there. But like I said, it's a good time to maybe tighten up stops. There's a level right there. About 25.21. So that's some resistance and the downtrend line. So if you are short crude, or if you're looking to go long, here are your levels to watch. You know, if it pops above that downtrend line and that 20 whatever level I just said there when I had the crosshairs up, 25 and change, that would be bullish. And of course, if it can recover 26, that would also be bullish. So I favor a little more downside before that happens, but you know, like any trade, don't let it get away from you. Sometimes they come within pennies of your price target and then reverse. So it's a good time to, you know, lower stops if you short it up here or on that kickback rally or anywhere, you know, anywhere near there. Okay, that's about it. That's, you know, a lot of stuff right there. A lot of different trading vehicles that have absolutely, some of those have absolutely nothing to do with the others. So it's all part of a, you know, diversified portfolio, whether you're an investor or an active trader. You know, if you're short the markets today, then hopefully you're, you know, long cattle futures and up on that, or, you know, hogs or whatever else is, you know, we're covering here. You know, so it helps to smooth out the bumps. Anyways, let me get this out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.